Hey everybody, it's Maddie here with you on this Friday. Hope you're having a fantastic one so far. Today we are discussing, again, the post-mortem of this price drop and how $1.2 billion worth of transfers may have affected that from a couple of different perspectives here. We're going to be discussing the Mayer multiple. It's a metric that you may not have heard of before. The Mayer multiple sits at 0.97 right now, which is a little bit lower than the historical average for Bitcoin. We'll let you know why that is significant and why it may be important. On altcoinbuzz.io, we have news that Libra might not be launched in 2020 as previously promised. A follow-up to what we looked at yesterday regarding the Sycamore Google supercomputer that now relies on quantum computing technology. Does this threaten the world of cryptocurrencies and encryption at large? We'll take a look at this piece on coil.com, a response to Charlie Lee on the statement that Ripple is, quote, faking it. You may have heard about that drama. And then finally, we'll leave you guys with this: millions of Loom tokens up for grabs. But let's begin first and foremost with a look at the market. We are down a little bit more today, unfortunately, 3.9% down since yesterday at $213 billion total market cap. Bitcoin dominance slipping ever so slightly at 67.8%. At the time of this recording, we are below 8K at $7,980. Things down a handful of percentage points, generally speaking. Bitcoin down just under 5%. Other projects down 2, 3, 4, 5, 6, even 7%. So it looks like hopefully the last little phase of this retracement that we're currently experiencing, but time will tell. And speaking of that retracement, this factor may have played a big role here. It's not something we've examined previously, but at Mohawk AGR made the following observation: $1.2 billion transferred, which resulted in the Bitcoin drop, or at least contributed to it. As we discussed yesterday, problems in this world tend to be multivariate in nature, and I know that's not how the human brain works. We like to attribute one problem to one factor and vice versa, but in reality, there are probably many factors. So Whale Alert, at Whale Alert on Twitter, missed this, as it wasn't done in a single transaction, but rather over the course of about an hour period. And you can read more about it on Reddit here. This from a couple of days ago on the 25th of September. $1.2 billion transferred at 3 p.m. BST yesterday, so on the 24th, triggered Bitcoin's 11% fall in price. Total of $5.3 billion transacted in the past 24 hours, which represents a jump of 164%. You can go into the metrics here and take a closer look if you're so inclined. I always like the comments on Reddit myself, and this is the one that seems to have made it to the top, rightfully so. How do I tell my son he ain't going to college? Pretty funny sense of humor on the website here, but I like this person's advice: just hodl until college, obviously. So there you have it. Check out the detailed graph for more information. Again, I don't think that this in isolation is what caused that 11% drop as they are suggesting, but in combination with some other things, I think, again, problems are multivariate in nature, and this was one of the factors that contributed to this recent slide that we're still experiencing. And here now is potentially yet another factor that needs to be considered: Bitcoin real-time data on mayermultiple.info. So the current price of Bitcoin is approximately $8,065, just actually over $8,000 once I hit the refresh button there. And the Mayer multiple sits right now at 0.96. You may have never heard of this metric before. It's a little bit more obscure as far as they go, but the average Mayer multiple since the creation of Bitcoin has been about 1.39, and the Mayer multiple has historically been higher than today's value, 65.22% of the time. So taking a historical snapshot, you can see here that the Mayer multiple has been as high as really about 14 or so, over 10, below 15, in that kind of a range. If you've not heard of it, the Mayer multiple was created by Trace Mayer as a way to analyze the price of Bitcoin in a historical context. It does not tell whether to buy, sell, or hold, but the Mayer multiple is the multiple of the current Bitcoin price over the 200 days moving average. Meaning if that we are below 1.0, the quotient of today's Bitcoin price over the 200 days moving average is less than 1, meaning that we are, in fact, right now below the 200-day moving average, which is something of some concern to some of the analysts out there. They've been kind of analyzing some of the same stuff, but perhaps stating it differently. So there's your Mayer multiple. Why 2.4? Simulations performed by Trace Mayer determined that in the past, the best long-term results were achieved by accumulating Bitcoin whenever the Mayer multiple was below 2.4. We are now well below 2.4. Since the simulations were based on historical data, they are purely educational and should not be the basis of any financial decision. decision. This is, of course, not financial advice. Don't assume that it is in any way, but I think that makes sense. When prices are depressed and you are below the 200-day moving average, that's a better time. Again, not financial advice, but I would argue that it's a better time to buy than when things are shooting up and are meteorically rising, because then you're buying at all-time highs after all. So this is a rather blunt instrument, and I don't think it should be considered solely. You'd have to take a look at this in conjunction with a whole lot of other variables, but there you go. The Mayer multiple. I've learned something new today as well, because I had not previously heard about this particular metric. In other news here on altcoinbuzz.io, Libra might not be launched in 2020 after all. Article by Natalia. Mark Zuckerberg has acknowledged many problems and is actually being quite open about them. Okay, so in an interview with Nikkei Asian Review, Zuckerberg acknowledged multiple problems. They pertain to data privacy, protecting users, and preventing election interference. In short, all elements that were exposed during the Cambridge Analytica scandal. Thus, the company decided to undergo a, quote, big focus shift and try and tackle the problems. He also admitted that Libra is indeed facing regulatory concerns. Thus, Zuckerberg emphasizes that it is necessary to have a dialogue with the regulators. Yeah, they are getting a lot of resistance at the level of US regulators, certainly. Quote, a lot of people have had questions and concerns, and we're committed to making sure that we work through all of those before moving forward. That's according to Mark Zuck. So despite his confession that Facebook may have to postpone the launch of its stablecoin, IBM seems to be in their corner. It doesn't seem like Libra is losing its general appeal with them. On the contrary, recent IBM blockchain general manager Jason Kelly expressed clear support for Libra. Kelly has not informed whether they want to join the Libra Association. However, he acknowledged that Facebook might raise the status of the association. Quote, our clients are ready to work with Facebook, and we're ready to work with all of them to bring it together. That's according to, again, Jason Kelly. So kind of flying in the face of Zuckerberg's more negative comments, or the positive ones here issued by IBM's executive there. And I guess we'll have to see what happens. Stay tuned. And here now is a follow-up to what we discussed yesterday with Google's quantum computing technology. Does Google threaten cryptocurrencies? Article by Licia. Google might very well possess a very special machine. If you haven't heard about this story yet, Google purportedly had a team of scientists that announced this major breakthrough. They had a calculation that they performed on what they're calling a quantum supercomputer that performed a calculation in 3 minutes that would have taken a standardized sort of state-of-the-art supercomputer 10,000 years to complete. So they're hailing this as a pretty major breakthrough in the quantum computing space. Now, of course, the relevant question, is it a threat to Bitcoin and its underlying encryption technology? So as Licia puts it, there is no doubt that many in the crypto world feel anxious. They believe that this is the end of Bitcoin and cryptocurrencies in general. Some say it will obstruct the mainstream adoption of blockchain. However, such fears seem to be too much. After all, a quantum computer cannot break the crucial public-private encryption techniques that serve as a basis for Bitcoin and other crypto, at least not in the next 5 years, according to Jack Mathieu, who is a team member of the Quantum Resistant Ledger. And they are focused on a project which aims to build a quantum computer-resistant blockchain network. There is also the lingering issue of error correction, which is currently a stumbling block to accurate calculations. Again, I kind of mentioned it yesterday, but if they're able to crack encryption at the level of blockchain and Bitcoin and other cryptocurrency technology, I mean, that's pretty much as sophisticated as it gets on a day-to-day basis. So if quantum computing is able to crack blockchain encryption, it's also cracked every other aspect of your life, every password, every banking record, every piece of information, whether it's personal, whether it's corporate, whether it's public in terms of the government sector, for example, whether it's national security or intelligence. Pretty much everything has been cracked at that point. So I think maybe there is deservedly some concern that people may have at the level of quantum computing and Bitcoin and blockchain, but to me that's sort of the last concern we should have. But hey, look, I'm not a computer engineer, so please correct my ignorance in the comments below if necessary. We're also looking at this piece now on coil.com, a response to Charlie Lee on the statement that Ripple is faking it. If you want to get into this melodrama between Charlie Lee and Ripple and XRP, check this out. We'll link to it in the description below. You can also check out this piece on altcoinbuzz.io. Millions of Loom tokens are up for grab. Article here by Ezekiel. Loom Network is expanding its ecosystem and wants you to participate. That about wraps it up for the news today on this Friday. Everybody, do be sure you are following us on all the regular social media channels and keep checking back into altcoinbuzz.io, of course, for all the latest updates. Go ahead, like, subscribe, share, hit the bell to receive notifications if you've enjoyed today's video. Have a great end to your week, everybody. A wonderful Friday. Best of luck if you choose to invest, of course. And as always, we hope to see you again soon in our next video this weekend. Take care, everybody.